someone is going to process $500 billion of loans, it's just who's going to do it. NettyWorth is an AI loan infrastructure that enables users to borrow and lend against their digital and real-world assets. Basically, the way we look at it is the way Visa and MasterCard has been the infrastructure of payments. Our goal is to become the infrastructure of lending in the Web3 world.
So I could have some digital assets, and yet you go to the bank and they're like, I can't give you a loan. And you want to be able to solve that because with Web3, they should be able to give you the loan even faster.
Anything like real-world assets that are on chain, it doesn't matter if it's a commodity such as gold or real estate or luxury watches, NFT, right, collectible assets, gaming assets. We want to facilitate all that borrowing and lending.
Now it gets interesting because you've got the AI-powered loan infrastructure.
Yes, think of like all the data that's in a user's wallet. We're evaluating these wallets every second. The minute that you have an asset that qualifies for a loan, we now present you with a borrowing opportunity and also an opportunity where you could earn by lending.
5 years from now, what do you want this to look like?
The part that I'm excited for is more lenders participating from all over the world, from all types of economic classes, because this is just going to make capital cheaper. That's the big effect of crypto and what we're doing that ends up having a massive network effect. That is the motivating factor of why we are going to continuously be part of this game.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs, sharing our vulnerability, overcoming our fears, transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.
This is London Real. I am Brian Rose. My guest today is Grullon, the entrepreneur, fintech expert, and Web3 innovator. You are the co-founder and CEO of NettyWorth, the first AI loan protocol built to power a new era of decentralized lending. Your mission is to redefine how we unlock liquidity in the age of blockchain, building a smarter, more accessible, and scalable lending ecosystem for both digital and real-world assets. You believe that anyone should be able to borrow against their on-chain assets with the same level of sophistication and insight available in traditional finance. At its core, NettyWorth is an intelligent loan protocol that fuses AI automation, DeFi infrastructure, and real-time asset data to serve a new generation of borrowers and lenders. You said that NettyWorth isn't just fueling the DeFi movement, it's creating an entirely new layer of trust, access, and liquidity across the blockchain ecosystem. July, welcome to London Real. in Dubai.
Thank you so much for having me.
Look, it's great to have you here. I want to start by saying that NettyWorth is one of our portfolio companies here at London Real Ventures, the world's first media-powered investment firm, where our mission is to transform the world by investing in cutting-edge Web3 and AI companies while giving our partners marketing exposure across the London Real media platforms and academies. We heighten awareness, create customers, and build communities by leveraging our global audience and extensive network. July, we're super excited to be part of this journey with you. So let's jump in.
Yes.
What is NettyWorth?
Yeah, so an AI loan infrastructure that enables users to borrow and lend against their digital and real world assets. And our infrastructure also serves as, as the technology that enables even dApps to use our technology so they can launch their own lending marketplace, right? And look at NettyWorth serving more like an aggregator, and all these parties could be processing loans throughout the world, right? So it doesn't matter if it's a user wants to borrow against a property in Dubai. A lender could be somewhere in San Francisco in that case. And basically the way we look at it is the way Visa and MasterCard has been the infrastructure of payments for the traditional world. Our goal is to become the infrastructure of lending in the Web3 world.
Wow. All right, and that doesn't really exist right now, does it?
No, I mean, we have players think of like Aave, where people are just borrowing and lending against tokens, right? Like Bitcoin, Ethereum, but not really dominating on-chain assets. So anything like NFT, right? Collectible assets, gaming assets, real world assets that are on chain. It doesn't matter if it's a commodity such as gold or real estate or luxury watches or anything like that. So that's the area that we're targeting. Any on-chain asset, right, that's not a token is where we want to facilitate all that borrowing and lending.
Nice. And that's for individuals and businesses?
Yeah. So if you're an individual, you could borrow and lend. If you're a business, you could use our infrastructure to launch your own loan marketplace.
Okay. And RWA is a huge narrative right now. You got BlackRock putting securities on there. You got Franklin Templeton involved near where you are in San Francisco. We've got wine going on chain here in Dubai. The DeMac Properties is putting a lot of their real estate on chain. Yeah. So as all of this is growing, it makes you guys just more needed, more relevant.
Yeah. That's how we look at it. As loan demand rises, users are going to need new options and new tools to access liquidity, right? And I think that's one of the biggest potentials that we see. Finn from BlackRock recently said, banks that don't adopt to crypto are basically going to go away over the next few years. It's the equivalent of writing a letter when you could send an email, right? Like it just doesn't work, right? And in today's world where there's all this asset, but it's not on chain, right? And most, think of like most folks that have a home and the process of refinancing that home. How long does that take? Or maybe they have a car collection, right? And then they have to, move the vehicle somewhere, or try to call auction houses to see who they have that could provide liquidity. Like there's so much friction with like real world assets that are not on chain, right? And that process of access to liquidity is very slow.
Yeah, so I could have, these watches and these cars, maybe a property, maybe some securities, maybe some digital assets, and yet you go to the bank and they're like, I can't give you a loan.
Yes.
Right, because you don't have a good credit score, or I don't see anything here.
Yeah.
And it just is a complete disconnect. And you want to be able to solve that, because with Web3, they should be able to give you the loan even faster, maybe in seconds.
Correct.
But now they can't even do it in 30 days because
Yes.
they can't evaluate those assets. And so they're missing, there's just a huge gap.
Yeah, and so one of the great things that we've done is a peer-to-peer market. So like, let's say in this case, let's say it's a piece of real estate. The real estate costs $1 million. It's worth $1 million. A lender could say, hey, I will lend you $500,000-$600,000 towards that asset. So the LTV will be about 50-60% of it. And basically that asset will be on chain. If the borrower pays back his loan, there's no issue there. If they default, that title or how that property is served on chain will be transferred over to the lender side of things. Yeah.
Okay. Now it gets interesting because now you've got the AI-powered loan infrastructure.
Yes.
So this is pretty exciting because I'm pretty sure there's no bank out there using anything AI-powered in their loan portfolio.
Yes, yeah.
Now you're plugging this into having things also on chain in RWA. How does this work, and how do you start to get your head around that?
Yeah, so the first part is like, not to go so deep into all the magic, right? But at the top level is like, think of like all the data that's in a user's wallet. So how much crypto they're holding, what assets they have. And what we're doing is we're evaluating these wallets, every second. And the minute that you have an asset that qualifies for a loan, we now present you with a borrowing opportunity and also a lending opportunity if we know you have enough wealth or enough crypto where you could earn by lending, right? So part of our mission is to just make Web3 users DeFi users without them even knowing. And I think the traditional world has done that very well. In the sense of like, the backstory of NettyWorth, it was like we looked at what Credit Karma was doing, and what, most folks that don't know, Credit Karma sold to Intuit for $8 billion. Most people in America view them as a credit score provider, but really what Credit Karma was doing was they were evaluating your credit score and knowing which loans you already qualified. Right, so they were selling car loans, home loans, right, personal loans, right, and it was because they had the data. And that's really the beauty and power of NettyWorth, where it's not just technology, but also the data from our users, where we're able to assess this and provide these borrowing and lending opportunities in a completely new way.
That analogy is super powerful.
Yeah.
And again, you already have a company in Web 2 in the finance world that's had that big exit. And yet you might have even better data in Web 3.
Yes. Yeah.
And so for people that don't understand the difference between Web 2 and Web 3 data, how do you first explain that? Because I'm sure when you're in Silicon Valley and you start to say, oh, and by the way, we know everything you did in your wallet. And I'm sure people in banking are like, what are you talking about? Because in a banking, your bank account, I can't see what you're doing. But in Web 3, I can. So talk about that and how it can make it even better what you do.
Yeah. So one of the great things again about Web3 is the transparency of everything being on chain. So we can know, hey, how much crypto Brian is holding, how much digital assets you have, and then we could go deeper there, right? So we can know how many times you borrowed and defaulted on a loan in the DeFi world. And this is where we created NettyScore, which tells lenders the repayment rate of a wallet. So the way we looked at this was, let's reimagine what a credit score is. And in the Web 2 world, you have your Social Security. In the Web 3 world, let's look at it like it's your wallet. So let's identify this wallet with this user. And let's look at, again, the crypto holding, the digital asset holding, how many times did this user borrow against their assets, how many times did they default, and let's provide a repayment rate to lenders so they could better assess these loans, right? So this is something we were very excited with. And then with our AI machine learning model, we start learning the behaviors of your activity, which is a great point to what you said, the transparency of on-chain data. And now we know what you like to borrow against and also what you like to lend against. So that way we could better serve our users. So for instance, if we know that Brian likes to lend on CryptoPunks and that's all he loves, right? So let's make sure that we present Brian with more blue chip type of assets that are there. And it could be vice versa. It could be another user where they're very focused on gaming assets in the future of maybe property on the metaverse or anything like that, and then we could serve that to them. This is why this is so important, because we want to make sure that as liquidity comes in, folks that are focused on particular segments such as real estate, collectible, sport cars, or traditional art, that we're serving them the right borrowing and lending opportunity by using this data. And this is where we start separating ourselves dramatically compared to anyone else, right? Because we look at us, it's not just the technology, but the data and how we use this data and how we're working with AI and machine learning to provide a completely new experience that most users, again, don't need to pay attention to, right? And on that side.
So if I'm a user and I come in, you'll start showing me things that I might really want to see, benefits and possibilities and things I might want to borrow or lend and different rates and things. And that's all based on my history and my data. It's very customized to who I am. And then the institutions on the other side can see, okay, these are the people you're going to have potentially really high repayment rates. These are the customers you want to focus on.
Exactly.
And then you're the middle with all the data, and the data could be worth $8 billion. Or more.
Or more.
Or more.
Yeah, absolutely.
What's the AI-powered learning like? Because you're probably one of the first people in the world to look at on-chain data, with that AI perspective. What are you kind of seeing and learning about people and the habits and things? I'm just kind of curious, are you surprised by some things or not?
Yeah, I think what I'm surprised about is how fast, like folks that are borrowing against their assets, they're, typically someone would think, oh, it's because they don't have capital. And, that maybe they're inexperienced. But the way real capital works is folks that have a high net worth will borrow against their assets because they want to do other things with that capital without, allocating additional capital somewhere else. So one of the things that we notice is that right now, a lot of high net worth individuals in the crypto market are borrowing against their assets, and which is like completely opposite from most people's thoughts of, oh, it means that someone doesn't have capital, right? So that's on a basic front. From the AI machine learning, I think the biggest thing is the opportunities that we're able to share. So for instance, if there's a lender that likes to lend against like Bored Apes or CryptoPunks, these blue chip type of assets, they're very open to new collections that are moving towards that direction. Or like art block projects that, could be worth, maybe 20 or 40 ETH. So what we're learning is that the machine learning aspect of it is presenting better opportunities for them and where they're open to it on that side, which is our main goal, right? Like to get outside the assets. So if you're a lender for real estate property in Dubai, maybe you want to also see property in New York.
Right.
Yeah.
And then maybe in the future, you might want a loan against something else.
Exactly.
CryptoPunk, maybe. But it's slowly but surely on that one. I'm curious, what are you seeing high net worth individuals do with that money they borrow from? Are they sometimes investing back in the market, leveraging up? Or,
yes. Yeah. So I think most of the time they're leveraging up, exactly how you said. And most folks don't know that just the NFT side of things, that's already a $5 billion market in lending. So it's already, I would say, a pretty good sized market, and which will eventually hit that 10, 12, 15 billion dollars. But yeah, that's the biggest thing that we've seen is that folks are taking short-term loans. So these loans typically are around 15 to 30 days, and they're making bets on these. And some of these guys are winning, like winning really big, right? So, interest rates are around 20% for the year. But again, the way crypto moves and the current market, this is the dynamic of, the current condition. We do see, because this is peer-to-peer, that as more lenders get involved on the peer-to-peer side, we do see where interest rates will naturally go down because now lenders are competing against each other, which serves the market in a better way.
What the London Real Investment Club actually does for you, it gives you the keys to open that door to the inside deals. In the last 3 weeks, I've participated in 3 incredible deals: a layer 2 Bitcoin protocol, an incredible AI protocol. The deal flow is beyond what I expected. I don't think I've ever seen a model like this that just gives average folks the opportunity to be behind the deals, and that's exactly what we've done. Not only that, you get to hang out with Brian Rose every week. And for me, that was huge because I look at Brian as somebody who's not only an expert in the space, and I think is on the leading edge, but just the leading edge of thought with London Real and the work he's doing there. To anyone who's taking a serious look at this, I know it's a big decision. It was a big decision for me and my family, and it is one of the best decisions I've ever made. So I wish you all the best and hope you come join us.
better way.
Right. And people are buying, what are they buying? They're probably not buying like meme coins and stuff. Are they kind of buying just...
I think it's still the traditional assets, the Ethereum, the Bitcoin, the XRPs, Solanas, and all that. Not to say some won't get in on some meme coins, but I think a lot of the folks that have, 50, 100, $500,000 in digital assets already, they're more experienced than like newcomers that are like, hey, I'm going to put 100K into like meme coins or something like that. Yeah,
and it makes a lot of sense. I know a lot of people in this space, and to free up new capital, to buy some Solana because you have a good feeling it's going up and we're not finally at the bull market quarter, that doesn't make sense. But if you're sitting there with, an NFT portfolio or a portfolio of other things and you're thinking, look, these things don't move, they're very blue chip. And why not, use $100,000 here on a monthly look when I know my NFT isn't going to drop by 80%. And if it does, okay, then I'll take that risk. But right now, I'd rather do that than borrowing against my home or using some cash over here. And you can do it quickly and efficiently, and
Yeah, I like to look at it like that. NFTs they were just the beginning concept of all this, right? And if you look at like a real world asset, it naturally just becomes an NFT, right? A non-fungible token is just the asset is tied to it, right? But yeah, I look at it like that it's just the beginning of what's to come.
Okay.
Right, in the potential.
Will your customers be able to borrow against their Bitcoin holdings and other things as well?
So in the future, we do plan to scale and go, let's say, multi-chain and across assets. So we are looking like, basically we want to make sure we're serving all markets, particularly where we chose to focus our attention and dominate in market share right now is on the digital asset and RWAs, because we want to be very, very early on that side of things.
Okay, gotcha. What's the NettyScore? Obviously something in America, everyone's really sensitive about their credit score. And like you said, it's typically linked to your social security number, which follows you around your whole life. But these days, I haven't lived in the States in a while, that score is important, right? Sometimes your employers check what it is, your loans, your credit cards, your car loans. It's like a number that's a big deal. Are you trying to do that same kind of thing with the NettyScore?
So the first version of it is to basically highlight how many times you borrowed and defaulted and to display your repayment rate to lenders. But this score will evolve in telling a much deeper story. And ultimately what we want to do is build a score around your wallet activity, your wallet holdings, right? Like the assets you own, and that layer of borrowing and repayment. So we're on version 1, but this will ultimately expand. We've seen a lot of folks in the Web3 space build credit score tools or technology. But one of the things that we found is that they were never tying that into a product, and that doesn't work because it doesn't have a use case. It's almost like I created this score and I hope someone uses it. In our case, it actually serves the lender. Right, and I think as we're going back and forth and learning a lot about what lenders want to see, we're very confident that we're moving in the right direction. And again, focusing on data versus just borrowing and lending on that side of things. Right, like this concept of borrowing and lending against tokens or digital assets has been around for 3, 4, 5 years, but no one has participated in this space using data, creating borrowing and lending opportunities, and using a NettyScore system like a Web3 credit score to provide lenders better data, right? And what we realize is, because this is still peer-to-peer, that when lenders could see a repayment rate, they're more open to increasing the LTV of an asset. So a lot of times you'll have someone that says, well, if this is peer-to-peer, and the asset is, has to be, it's already under collateral, who cares about the repayment rate? But actually, it does matter, right? If you said, hey, I want a $100,000 loan, the lender says, okay, I'll give you $50,000. But he sees that your repayment rate is 98%, and you say, okay, you know what, let's counter. Let's meet at 70,000. Much more open to doing that loan. The other part, just to highlight, the repayment rate in this industry, and we talk about this thing of like, digital assets collapsing and they're not worth what they used to be. 92% of users that borrow against these assets pay back their loan, which tells you that the asset is worth something. No one is going to lose the asset. So about 8% of borrowers default on that side of things. These are all term loans, so we never do forced liquidations or anything like that.
Okay, interesting. Now, how much of your day is spent focusing on the borrowers versus the lenders? And are they very different types of people?
Yeah, so our business development team is, I would say they're working on these things equally, right? Where we're contacting borrowers, contacting lenders, and a lot of times we're working to get them in our network. And I think this is like pretty insane, but like when we were first building this, what we realized is that our competition manually was contacting these users the same way we're recruiting, right, users, and they still do that because they have no data and there's no way to create like borrowing opportunities, lending opportunities. So the minute we get them in our system, the magic, everything starts there. We just got to get them in, right? And that's what our BD team is very focused on, where a lot of the folks that are in our space, they have to almost have a manual dialogue for every transaction. And we don't see that as a scalable option. I think they've done a great job. They've grown the space, to new heights. But that's not scalable to reaching that $100 billion mark in loans.
Okay, so your stuff is all automated.
Correct, yeah.
Okay, and that's super important.
Yeah.
And so I come in, you plug in the asset, you can evaluate it, you can start going back and forth and then decide if you want to do it. You don't need like somebody to get on the phone.
No, yeah, you'll connect to NettyWorth or any of our partners that are using our infrastructure, and you'll get borrowing and lending alerts, starting in day one, and you could assess. You could say, hey, you know what? This makes a lot of sense. I have $5,000 that's just sitting in my wallet. I could lend this out at around 20% APR. The borrower has to pay me back in 15 days. It makes sense to put my crypto to work, right?
Yeah.
And I think the part that we're excited about is that someone in Argentina is going to be able to earn money on their crypto, just like someone in Japan. And
Right.
we're the ones powering that.
Right, because it's no longer about the person or the country or the location, it's about the asset.
Yeah, exactly.
Which is what lending should be based on.
Exactly.
It's interesting because I teach DeFi to my academy, and the concept is interesting, and my students plug in and they go to Aave, and it's really interesting. And then I say, what'd you get? And they're like, well, I got like 0.5% annual. And then they realize how much that is every few days, and then their heart sinks, and they think, well, I'm not going to be doing this. And for many people, that's their only option. But they can't come in and say, well, what if I want to, increase my risk, increase my return, and I want to see it a bunch of variety of ways I could make money. Yeah. And that's what you can bring to people.
Exactly.
Right?
So what we're noticing is that lenders that were in the traditional DeFi space is moving on to the digital asset because of the yield.
Yeah.
The amount that you're earning. I had this one lender where he was saying, hey, July, if someone has an autoglyph, which is around 200,000, or let's say a CryptoPunk, 100K, he's like, I will lend at 60% all day to these assets. Now, why? If that borrower defaults, you could go sell that in the open market for around a 80 to 92%, like instant loan, right on the offer. So they make their big money when the user defaults.
Interesting.
So if they pay back the loan, they're still getting better yield than going to Aave. And if they default, many times that's where the lenders hit like the jackpot.
Okay, so let's dig into this. Let's say I come in and I'm like, all right, I got 5,000 separate. I want to get some decent returns on this. I lend it out. The borrower defaults. Is there a smart contract in there that'll deliver that asset into my wallet so I can liquidate it?
Yeah, so you could claim it. Yeah. So the minute they default, you could go to NettyWorth, claim the asset, and it transfers right to your wallet.
Wild.
So we take care of all of that. And one of the cool things that we build is we build receipts for the borrower to identify, hey, I took out this loan, and promissory notes for the lenders. So in the future, we also see a world where a lender has about 10 outstanding loans, and he could repackage all these loans to an institution or to another person.
Okay, right. Or resell them on to someone else.
Exactly.
Okay.
Yeah.
You said the magic word, institutions. Right now, you're peer-to-peer on this platform. At one point, do you believe institutions will come in and start, I'm guessing, lending? And what type of institutions do you think will be the first?
Yeah, I think first of all, that's a great question. I think we're about 2 years out on the digital side of things and RWA, where it's going to get serious. Because I think what's going to happen is there's going to be billions of dollars being traded on a peer-to-peer side, and then institutions are like, all right, hold on, guys, we got to come in. Which is the same story of like Bitcoin, right? Like, Bitcoin hits 17,000. All right, now let's start looking at this, right? So I think it's still some time there, but I do think that it's going to be on commodities and real estate. I think that's going to be the major push there. I don't know how much they're going to dominate once, like, family offices get involved and all that, right? Because it's like, what prevents, certain family offices to say, hey, we're going to put 100 million, 200 million here on the lending side. But yeah, I think 2 to 5 years is going to be the time where institutions are 100% in the game. Like, they're like, hey, we're not dismissing digital assets, RWAs, or anything like that. And I think that's about the right time frame.
Because you're really going into their market. I mean, these institutions have been borrowing and lending money for hundreds of years.
Yeah.
And now you're doing it in this new asset class in Web3. It seems that once you're successful with it, they're going to want a piece of that.
Yeah, and they could hopefully buy more of our tokens.
Right. Okay, good.
That will come out in the future.
Good. I want to talk about the token for sure. When it comes to kind of these assets and these institutions that might even come in and loan, how much work do you think that, say, BlackRock's doing with their BIDL system with RWA, and Franklin Templeton with their model of putting like securities on chain and things like that? Is that really helping get these institutions all around comfortable, with digital assets and in the future lending against those?
Yeah, I think it's phase one, right?
Yeah.
Because it's really like, where should they start? And it's already an arena where they're already participating in. And I think it makes a lot of sense for them to look at that, right? And I think, again, as these institutions become, how you said, more familiar, more comfortable, and new markets emerge, that's where they're going to open their eyes and say, well, we're already participating here. We might as well do X, Y, Z.
Okay.
Right. I think that's how.
We got 2 stablecoin acts going through Congress right now, and the word is one of them could be signed by August. We'll see. But the Bank of America president said, when that happens, I'm going to issue the Bank of America stablecoin. Now, people forget the stablecoin is the original RWA, right? Yeah. It really is. And I'm telling my students in my investor group this all the time. I mean, that's mind-boggling that, B of A might have their own stablecoin, and all of a sudden, you might have a bank account that's on the blockchain.
Yeah.
And you can't, and once they're comfortable with that, it seems like the next step would be loaning against, digital assets like your platform does. Do you see that the same way? And how do you feel about that legislation? And can you really see banks issuing stablecoins and those being available in your bank account? It seems like a alternative reality.
Yeah, I think the end user won't really see the difference.
Okay.
Right? Because I think if you look at like today, most people's I think most folks don't understand how money moves, and they just view their money already being digital. So I think for the end user, I don't think there'll be much of a difference. I think on the banking side, obviously we know the reasons, right? More efficient, the ability to move capital, how it's shown on a ledger, all these other pieces of technology that Web3 provides. But I think to the end user, they won't see much of a difference. And it's really about how the bank adds to their current services, right? Because I feel like how we were just, touching on loans, I think the traditional model of how banking doesn't actually serve most most folks. I mean, even business folks that are like moving millions of dollars, that you're like, hold on, why is it taking 5 days? What do you mean you don't know when it clears? Right? Like even that concept. So I think like once they're on chain and let's say they're doing everything, let's say with stable, then it becomes how do they actually evolve to participating in a world that's completely different than where they were before. Because if not, there's going to be multiple players here that are going to start eating into their revenue model, right, of what they had, right? It's a very, I call it like dinosaur age type of tech and service. And I think that's the part where the bank is not understanding Web3. It doesn't allow you to, the current model doesn't allow you to serve your users, right? And I think that's a big point, right? Like how many folks are like, I want a business loan and I go to the bank. What business loan could you get? You can't get, there's no business, there's no business loans, right? I remember in 2008, I had top tier credit and I go to get a motorcycle. And they were like, hey, right now lending is pretty tight, so the bank wants you to put 40% down on a motorcycle. And I'm like, 40% down? I have tier 1 credit. What do you mean that the bank is tight right now, right? I just think that, the current model and the way it's been serving users for the past 25, 30 years, it just doesn't work.
Right.
Just doesn't work.
Or not serving them.
Yeah, not serving them.
Yeah. Also, what about that lower tier of people? You mentioned Argentina, but what about, the Western Union crowd? There's a really underserved and some would say exploited, group of people that payday loans and Western Union people where they're paying these extremely high rates where if you put all of that data on chain, I'm sure you couldn't justify. I'm sure there would be middlemen would come in that would want to loan at lower rates and give better options to these whole businesses that are set up around that asymmetry of information or access. Do you think that's something that you guys will help contribute to in the future as well?
Absolutely. I think the way we view NettyWorth is really from a financial service side of things, where the future is like endless, where we could go with this, whether it's loans on invoices, right, or a new era of like payday loans, right, with much better rates for people and genuinely helping them, right? And I do think, I do see a world where our services just continuously expands on that side of things. And I do think other players are going to come in and affect the traditional banking system because of this. Yeah. Right? It just doesn't work. And again, the part that I'm excited for is more lenders participating from all over the world, from all types of economic classes, because this is just going to make capital cheaper. And I think that's the big effect of crypto and what we're doing that ends up having a massive network effect.
Right. There's no longer some gatekeeper in the banking sector that can kind of determine the rates. Now they're determined by the market and individuals and a whole host of people all over the world. Yeah. Yeah, that's powerful. Tell me about your tech, because you mentioned, if the guy defaults, I can go claim the asset, it goes to my wallet. How important is your tech to be robust, and how can I trust your tech? And is that a big issue for your customers or not?
Yeah, so everything is done on chain with our smart contract. So think of it again, once you're borrowing against an asset, it goes into escrow, pay back the loan, you get back your asset. If not, the lender could claim it and keep it. Yeah, so basically everything is done on chain, on a smart contract. NettyWorth has no access to any of this, right? So we're not touching any of the funds, we're not doing any of that. Nice. And we're never touching the asset itself. And then we have to go through an audit process, right? So there's incredible companies out there. We've had 2 audits, and in the future we'll have hundreds of more audits, right? Multiple times a year we'll end up having audits. And basically what that's doing is basically saying, hey, how secure is this smart contract, right? And we know that, right, we're also operating in a space that is constantly evolving, and this is why we just have to continuously stay on top of our audits and what we're doing, and every version of the platform has to be audited. But I would say most users, that's not a concern because they're already familiar with the way like on-chain activity already works. And I also think that like our goal is to really remove that friction of like, is this safe or not? And a lot of it is by trust. Like all of us are very public, right? So like everyone knows me on Twitter, everyone knows me on LinkedIn, everyone knows my face, right? The team members as well. Like we've been in the community for 5-6 years.
How do you get out of a rat race? How do you create wealth not only for yourself, but also for the generations to come after?
I am absolutely amazed with the quality of companies that we're getting exposure to.
We go on to Zoom calls with the innovators and the folks who are building new applications in metaverse, blockchain, artificial intelligence, decentralized finance.
What's going on, everybody? Thumbs up if you can see me.
We are focusing on early stage investment.
And the quality of people that we're getting exposure to, whether it be Dan Tapiero with 1RT, Jason Ma from Open, Yatsu from Animoca.
It's been a phenomenal experience thus far. It has far exceeded my expectations.
We are focusing on cutting edge technologies.
I view it now as the best investment I've ever made. The upside I view is unlimited.
And as a retail investor, I would never get this exposure anywhere else outside of Investment Club.
See you in the Investment Club.
It's not something that we're like hiding or anything or remaining anonymous on that side. So I think it's trust, right? So hey, these guys been in the space for 5-6 years. They've been building for 2 to 3 years. They're very public, right? Like when we build, we've had issues where like, a user is like, hey, this part of the platform is not working for me. And he's like, wow, the team is like responding to me, helping me, and all that. And I think all of that builds trust. And especially once someone uses it and they know that you have a support team there for them, they're just going to keep coming back.
Yeah, I can't emphasize how important it is that you guys are public and you've got real names and real faces. And look, it's happening less in Web3, but there's still projects out there where people have NFTs as profile pictures and they got funny names and and I don't play any of that stuff. It really is important. I think it's really that abstract value people don't talk about, where there's that whole trust system behind you. And you're in the States, which I want to talk about what that's been like, because you guys push ahead in a space that wasn't always friendly from a regulatory point of view, and also still lacks some clarity, although it seems like we're going to a good place. I want to ask you about that, but I first want to ask you about the Netty token, because you talked about that, and this is really important. Because your business is on the blockchain, which is incredible, but now you're going to introduce a token. Now you can do this right and you can do this wrong. And one of the things I always ask our portfolio companies when they come talk to us is, why do you need a token? And there's people out there that really generate incredible tokens with great tokenomics and great utility and great demand infrastructure, and there's people that just throw them out in the wind in order to raise money. I know you've thought deeply about this, and the token has yet to be generated. Talk to me about how you get your head around how to create the right token.
Yeah, I think the story of the token really starts back, it goes back to the product, right? So a lot of folks that are releasing tokens, I believe that they're either releasing them too early or they're releasing them for the anticipation of building something, which I think is totally wrong. I think because we have fundamentally a real business model where we're processing loans, we're taking a fee for every loan we process. And basically, as again, loan demand rises, it will actually serve a big benefit to have a token on that side to reward users. So one of the things that we're looking at is rewarding users for borrowing, lending, which has been done. But one of the new models is rewarding users for paying back their loans on time.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.